This morning, some of the Asian markets are a bit under pressure. Some of them are flat, but the SGX Nifty is indicating that after yesterday's good showing, today maybe we could see some follow-on. But here is the list of top 10 stocks you need to watch out for as we head into trade today. Anuj, since it's Children's Day, anything children-specific that you'll be looking at?
Not really, I think so. Yeah. By the way, my elder daughter, when I told her that you'll be on TV, she said, "So what should I wear?" And she thought that she would be live on TV. And I said, "No, I'm just only going to be a picture of yours."
There's still some time, you can tell her, maybe 10, 15 years later.
Anyway, let's talk about the stocks. I think Grasim, we pointed this out earlier as well, 15% higher in 12 days, quietly moving up. I think a lot of people would not have even noticed the kind of move that it's seen. And I think it's a sign of some really good accumulation which is happening on this stock. The other one is Jsw Steel. I think today the focus will be on Tata Steel numbers. I think the fact that domestic numbers are so good would mean that the companies which are purely domestic or majority domestic oriented would look quite okay today. So Jsw Steel also bouncing back from 200-day moving average after a correction, and a classical pattern of index inclusion, then a correction to 200-day moving average and a bounce, I think, is looking quite interesting on Jsw Steel. So that's something that I'll watch out for today.
We'll now start seeing the impact of rupee depreciation, and therefore domestic steel companies, domestic aluminum companies all doing well. But let me just take the easiest trend, the Brent price crash. Should mean, of course, oil companies inch a little higher. So would airline stocks, so would paint stocks. Actually, so would even the Nifty Bank, because there is going to be an impact of a stronger rupee and lower bond yields. Well, that's generally across the spectrum. More specifically, Ashok Leyland, it's a double whammy?
It is, and I think Mr. Dasari's resignation will be taken as a near-term negative. I'll tell you why. Of course, we all know that he was credited for the turnaround, etc. But there's no proper succession plan in place now. Dheeraj Hinduja will be taking over immediately, but Dheeraj has no real expertise in a day-to-day running of the commercial vehicle business.
Job, yeah.
Yes, so as of now, that uncertainty is something that will remain an overhang. And as we know, a premium is generally given to great, management, and because of that, maybe some of that steam could come off. So until we don't know who's the next person in charge, that uncertainty is definitely going to remain. And, the stock, the earnings as well are nothing great to write home about. Realizations have been under pressure. So I guess there could be some pressure.
There would be some pressure. And, the point I made about IndusInd Bank as well, I think some time back, what next after Mr. Sobti? And there also, the general belief in the market is that perhaps the Hindujas themselves want to put their own man at the helm. And that's going to be a bit of a problem with the Hinduja group, and we've seen it. We've seen some kind of de-rating already in Ashok Leyland. Now it will be interesting to see how much more is there. But is this going to be giving you that buying opportunity or not? But in the near term, I think there's going to be some more de-rating for sure.
I just want to make one more point, lest we run out of time. It's important because just before he left, the last interview that Mr. Dasari gave, he was very aggressive. He scaled up the volume growth assumptions for the full year for the industry. So it comes as a bit of a shocker to retail investors.
I mean, there was no warning. He seemed to be raring to go. Point taken, but another huge shocker of a news that came yesterday was from Z Entertainment. The Subhash Chandra family, SL Group, wants to look for a strategic investor, bring down its stake. Mangalam.
That's right. It caught all the street unawares out there as well. So the promoters looking to sell 50% of their holding, which is about 41.6% as of last reporting, would amount to around 8,500 odd crores. It's interesting that, they're looking for a global strategic partner in the augmented reality, virtual reality, Internet of Things and 3D printing space. Also interesting that the CEO of Netflix was in India, and the release does not mention OTT or video streaming. So who the player is something that the street will be watching out for. As far as the stock is concerned, it's down 30% from its record high, and 59% of the promoter's stake is also pledged. Let's see where it goes. The jury is still out because the uncertainty limits the upside, but the promise of a new investor and perhaps an open offer puts a cap on the puts a floor on the stock price.
Oh, yes, and it depends on who the new investor is, right? I mean, until that uncertainty holds, perhaps there could be a bit of an overhang on the stock. But Sun Pharma, Ekta's here to give us more details on that. Ekta?
Well, definitely a disappointing set of numbers coming in for Sun, Sonia. So revenue was up around 4.3% versus expectations of a 17% rise. The US markets missed estimates. $342 million is what they generated in terms of sales versus expectations of $380 to $390 million. Margins, however, were in line, so they sustained at 22%. 2%, but there was a loss on account of a write-off of over 1,200 crores on account of a drug. Edelweiss has downgraded the stock. Morgan Stanley has stayed underweight and said that Q2 FY19 was a miss.
Okay, that's not very good news. Okay, let's get to the good news from Tata Steel. Nigel?
Well, Tata Steel's numbers first look very, very good, but there were a couple of adjustments in that operating profit. There was a forex element of around, close to around 900 crores, and there's also an others component of around 1,200 crores. The given India EBITDA per ton was more than 19,000 rupees per ton, so that looked fabulous, but you need to make a couple of adjustments, and it came in closer towards 17,500 rupees on a per ton basis. That's still better than what we were working with, of around 16,600 to around 16,700 rupees on a per ton basis. So India looked good. Europe was a bit of a disappointment. The debt's still high at more than 1 lakh crore, but the management is talking about reducing it by $1 billion.
Okay, thanks a lot for that. Well, getting back to the pharma space, Ekta, how did Glenmark look?
Well, actually not too bad, and I expect the stock to probably be in the green just based on the numbers. But remember, the conference call is at 8:30 a.m. So revenue up around 14% versus expectations of a 10% growth. Growth was led by the US after 4 consecutive quarters of a decline. The US grew around 11%. Margins were stable at 17% flat year on year, and the profit was 414 odd crores, which was aided by an exceptional income on account of their sale of their orthopedic India business, which took place a quarter earlier.
Okay, thanks for that. And more steel stocks and metal stocks. Nigel, JSPL, NMDC.
JSPL domestic business looked very, very good. In fact, that beat expectations, and that's what drove the beat as well. So consolidated margins came at around 22%. We were working with around 20%. The problem for JSPL really is not in terms of the operations, it's in terms of how did they reduce their debt. If you look at the numbers, it didn't appear that there was any debt that was reduced in the past quarter. So that isn't very good news, but otherwise, the numbers look very, very good. Shifting focus to NMDC, those numbers didn't look very, very good. Small miss on the top line. The margins as well missed our estimates. A couple of costs in there spiked up, other expenditure as well as employee costs. The profit number as well came in low because taxation was higher. Keep in mind what's going to happen in terms of the Donamalai Karnataka mine. That's most important. For the time being, the stock should open up in the red.
Okay, stock should open up in the red for NMDC, JSPL, good showing. Abhishek, what about PNB Housing and Corporation Bank?
Well, to begin with, Sonia, PNB has informed exchanges that Carlyle will not be selling stake in PNB Housing Finance. So, independent stake sale will be done by PNB itself, which holds about 32.8%, which at current market cap is valued at close to around 5,250 crore. Remember that Carlyle holds about 32.4% stake in PNB Housing Finance. In Corporation Bank, for the first time in last 6 quarters, they have arrested the loss momentum at the PBT level or the profit before tax level, and they have reported the highest net profit in last 6 quarters. The gross NPA in absolute value was flat quarter on quarter. However, on account of lower loan growth, the ratio was flat quarter on quarter. Back to you.
Okay, thanks a lot for that. And a bunch of other results from Anisha.
Well, yes, it was a busy evening yesterday, given all these infrastructure came out with numbers post-market hours. Let me start with the weak ones. Dilip Bilkon, for example, the revenue growth came in at just 3% versus 30% expected, and the profit has declined over 30% year-on-year. The balance sheet has worsened as well, and they have increased the timeline for the Shrem deal cash to come in. But the only silver lining is that they have maintained the guidance, so a red tick for that one. PTC India as well. Yes, the top line growth came in at 30%, but it is still weaker than what the street expected, and the profit is down about 27% given that the other income of the company fell as well as the tax expenses went up. J. Kumar Infrastructure, a very good set of numbers coming in. It is the second straight quarter that the company has surprised us. The revenue came in at 515 crores versus 370 crore expected, and look at the profit as well, 35 crores versus 22 crore expected. EIL, well, the top line growth was strong and was led by the turnkey business, but the margins disappointed. And lastly, on CG Power, no real update on the stake sale, but the improvement continues because the revenue came in better than expected, though there was a loss given higher losses from the discontinued operations. Back to you guys.
Thanks a lot. Yeah, I agree. She was busy with all those results, but you know what yesterday evening was? First we get Dasari, then we get Benny Bansal, then we get Z Entertainment, and then we have CNN taking Trump to court. What a busy evening it was.
What a busy evening, and so many resignations, right? What's happening? I mean, people going on sabbaticals perhaps for a while. But you know, a lot of big numbers coming out today as well. You have M&M from the large caps and so many non-index large caps, Page Industries, etc., coming out with their numbers. Sonal is here though to give us a list of some of the other results that came in post-market hours yesterday. Sonal.
Good morning, Sonia. Well, I'll start with Mahanagar Gas. Well, margins were a bit of a miss. They declined by around 230 basis points sequentially, but that was expected because of higher material costs. Volume growth, though, was very strong, came in higher than the poll. So the total volumes, they went up by 10% on a YY basis. CNG and PNG volumes also showed growth of around 10 to 10.5% on a YY basis. Expect stock to do well in trade today. Suntech Realty, on the other hand, it was a mixed quarter operationally, while the pre-sales revenue, that was very strong, grew by around 148% on a YY basis and 132% sequentially. The collections declined both sequentially and on a YY basis to 140 crore rupees. Deepak Fertilizers reported a weak set of numbers, and the weakness was led by the fertilizers business. The profits, they also declined by 57% on a YY basis. Additionally, company has also announced that they will be raising 500 crore rupees through NCDs. So expect the stock to do not do well in trade today.
Okay, Sonal, thanks a lot for that. We told you about the MSCI changes which were going to be implemented from yesterday. Of course, yesterday was the review, and Nimesh had got that list. Nimesh, no major surprises there?
Yes, and so no major surprises, so to speak. So for the global standard index, one addition and two deletions. In terms of addition, Divis got added, so pretty much on expected lines. But I guess there could be a bit of a negative surprise for likes of RBL and ICICI General Insurance, because those are the two names which was highly expected to be added to the MSCI large cap index. So maybe a bit of a negative reaction there. In terms of deletions, again on expected lines, both BHEL and Siemens got deleted, which was pretty much expected for most of the brokerages. But the bigger surprise came in the small cap indices for India. There are some 13 additions, and almost 37 stocks got deleted from the MSCI small cap index. In terms of prominent names, in terms of additions, a lot of financial stocks got added. So the likes of AU Small Finance, Bharat Financials, Equitas, PNB Housing, all got added to the MSCI small cap. In terms of deletions, the biggest name which could be a bit of a negative surprise is Jet Airways, and a couple of other names like CDSL, Deepak Fertilizers, whole host of names. But I guess BML and Jet Airways could be a bit of a surprise for the deletions. And in terms of additions, of course, Divis Labs is a big gainer in the large cap index.
Okay, thanks a lot for that. Well, in case you missed out on any of them, here they are. A quick recap of our top stocks to watch. Stocks with positive news flow this morning: Grasim, Jsw Steel, HPCL, BPCL, IOC, Asian Paints, Berger Paints, Jet Airways, Interglobe Aviation, Z Entertainment, Tata Steel, Glenmark Pharma, JSPL, PNB Housing, Corporation Bank, J Kumar, EIL, CG Power, Mahanagar Gas, Suntech Realty, and Divis Labs. I've run out of breath now.
Yeah. A few stocks with negative news flow. Ashok Leyland among them, Sun Pharma, NMDC, Dilip Buildcon, PTC India, Deepak Fertilizers, Siemens, and BHEL. I would add Z over there. I'm not very sure if that won't have a negative tinge.